Good morning to one and all present. I am Dr.V.Deepha from the Department of Business Administration. Today we are going to discuss about the finance. Under that, the topic corporate restructuring under merger and acquisition and due diligence. First, you should know what is a corporate restructuring. Corporate restructuring is an action taken by the corporate entity to modify its capital structure or its operations significantly. So they want to modify the capital structure made by the organization. Generally, corporate restructure happens when the corporate entity is experiencing significant problems and is financial. So the process of corporate company or restructuring is considered very important to eliminate all the financial crises and enhance the company performance. Mainly they want to improve the company performance. So the management of the concerned corporate entity facing the financial crunches hires a financial and legal expert for advising and assisting in the negotiation and transaction deals. So under this corporate restructuring concept, strategy reorganization of business, operations, assets, ownership or finance. Second, what are the reasons for restructuring? First one, you want to improve the efficiency, reduce cost, enhance competitors, unlock value. I give a simple points to understand. Under the reason for restructuring, barriers of restructuring. So this all comes under the concept. What are the barriers? Under that legal issue, employee assistance, cultural challenges, financial constraints. Next, types of corporate restructuring. Under the types, you have the financial, operational, organizational, portfolio, strategic restructure. So these are the types comes under the corporate. So we discussed about financial restructuring. So this type of restructuring may take place due to the several fall in the overall sales because of adverse economic conditions. Second one, organizational restructuring. It implies a changes in the organizational structure of a company as a reducing the level of hierarchy, redesigning the job position. Third one, only 2 points you have to discuss. Next, we are going to discuss about mergers and acquisition concept. First, a combination or purchase of business to create the value. Classification of mergers, you have the types: vertical, horizontal, conglomerate, market extension, product extension. Then what are the motives of merger and acquisition? Synergies, market expansion, diversification, economies of scale. Then what are the process comes under the merger and acquisition? Strategy, target identification, valuation, due diligence, negotiation, integration. Reasoning for failure of merger and acquisition. What are the reasons? So under this you have the poor integration, overvaluation, cultural mismatch, regulatory issues. Next, reverse merger. It is one of the important types in the merger. Private company acquire a public company to become publicly listed companies. The company will be listed private, but it is acquired the public company. Example, the given Air India, Visitor Integration, Adani Group, Jayaprakash Associate transaction. These are recently made by the examples. Acquisition concept and type. Acquisition, under the types you have the friendly, acquisition, hostile, leverage, management, payout. Due diligence. What is the meaning of due diligence? It comes under the financial, legal, operational, tax, HR, environmental reviews. Cross-border acquisition. Under this cross-border, you have what are the benefits comes under challenges faced, cultural and regulatory consideration. So under the reason of corporate restructuring in this topic, first you are going to change in the strategy. What are the strategy made that we should be changed? the management of the distressed entity attempts to improve the performance by eliminating the creation of certain division and subsidiaries which not be aligned with the core strategy of the company. Next, lack of profit. Their revenue will be lack because may not undertake enough profit making to cover the cost of capital of the company and may cause the economic losses. Then third one, revise synergies. So the concept is to constraints of the principles of synergies where the value of merged units is the value of individual units collectively. Cash flow requirement, needed cash flow requirement, disposing of an unproductive undertaking can provide a considerable cash inflow of the company. So under this gross broader accusation, benefits challenge, cultural, regulatory and consideration. Last, we are going to discuss about what are the keys made by this PPT. So restructuring improve the organizational performance. Merger and acquisition support strategic growth. Due diligence reduce the transaction risk. Cross-border acquisition create a global opportunity. Thank you.